Dhiraj, what's happening there? Because in the listed space as well, when you talk about capital markets as an ecosystem, you had AMCs, you had brokers, exchange, and maybe exchanges going forward, and then there are wealth companies. And that is a segment which has really come into its own. And these are ultra high net worth individuals making bets, putting money to work. What's driving that phenomenon, that segment really?
I think it's attributable to many areas, and I would say the culmination of rising affluence. Just to give you an example, in 2022, we have about just 8 lakhs investors with the 1 million plus kind of wealth. This is growing at 16% CAGR, and now going to be in 2027 about 17 lakh investors. Maybe it will reach to about 2.5 million investors by 2030. In Indian context, when we have a 1.4 billion population, this looks to be a very small fraction, but this is the people who are currently having an asset pool of $1 trillion and slated to go to $2 trillion by 2030. So we are seeing the rising affluence in India across all across the pyramid. We are seeing in the top income level also, at an ultra HNI level also. We are also seeing at the mass affluent and middle income level also. And financialization of saving as a theme is playing out. I can substantiate this with few data points. Look at it, our mutual fund AUM. In last decade, it has grown by 20% CAGR, now 75 lakh crore. I don't think so 10 years ago, had we spoken about the mutual fund industry, we would have ever imagined that we could reach to a level of 75 lakh crore kind of mutual fund AUM. It used to be just about 11% of deposits. Now it's 30% of the fixed deposits and liabilities. So to that extent, we have seen the financialization of savings have been playing out. In fact, SIPs have been growing at a 2% CAGR per month for last 5 years. And if we extrapolate that number, it will be a 1 lakh crore per month in 2030. And I wrote an article about it 6 months ago and called it as an equitization of savings. So other than this, I think there are 2 more factors that are playing out. One is demographic dividend in terms of investors. The average age of Indian investors is just about 32, which clearly means that they have a runway of 25, 30 years to earn and invest. So that's something which is very different than most of other countries in India. And also, we have had a regulatory tailwind in last many years. I think most of us crib about the cost of compliance going to the roof, but there has been a regulatory tailwind. We've got T+1 settlement, we've got, RIA guidelines, we have got clearly enabling ecosystem to digitally onboard the customers. Today we acquire 100% of our customers through a 5-minute, 6-minute journey. These are all our big enabling ecosystem. In fact, SEBI has corrected the expenses that can be charged in a mutual fund scheme, recategorization of various schemes and streamlining them. So I think there has been a plethora of initiatives by the regulator also to make ecosystem more congenial for growth.
As they say, gains beget gains.